Okay, hey, this is Grant. So I'm going to take a few minutes here to explain this chart. So we're looking at a 1 minute E-mini chart here, and I've got on here the um, the market engine indicator. So that's the green lines. What I wanted to spend some time focusing on were patterns of the market engine indicator. Now I've put some vertical lines on here to show what the pattern represents or translates into up on the price chart on the top. So hopefully they're not too distracting as I go through this. There's three patterns that I'm going to describe. One's called halfback, the other's called two-step, and the other's called divergence. All right, so let me just start with halfback. So many times the market will make multiple pushes in the same direction. And the halfback pattern helps us to recognize when that occurs. So let's say the market engine has pushed price down, and the market engine indicator has touched the bottom orange line. So if you see my mouse here, so it's come down, it's touched the bottom orange line. All right. So let's say that's happened. So price is pushed down. So we got like this right here where my mouse is. Okay. Now let's say then what happens is the market engine pushes price back up. So if you follow my mouse here, price is going back up. What happens though is that the market engine indicator gets halfway or maybe a little bit more, but it gets about to the zero line, which is this gray line coming through here, right? What you do is you draw this trend line across here on the engine indicator. All right, you can see where my mouse is there. You draw that trend line, and as the indicator breaks that and comes back across that, there's your high probability situation. What this is saying is that price, the engine was able to get price only so high, and then it fell back. Right, so that's a halfback. Let me in this case on this chart it's halfback 6. All right, I've uniquely numbered each of the different patterns here. Here's a halfback number 1. It was on the open of the day. You can see as price came down, the market engine itself was dropping down, and what happened here is it got to the halfback. In fact, it got to the halfback. In fact, it got a little bit more than that even. And so I draw this trend line right here, and then as price kicks, as the market engine starts pushing back up, price starts responding. Then in this particular case, it goes to the upside. So the key is to this pattern is that the engine indicator is starting at one edge of the orange, right? So in this case, it's starting at the top, comes down, just gets over halfback, and then starts to push back up. Okay, that's halfback. That's in this case, that's halfback to the upside. Coming over here to the right, where it's a halfback to the downside, here you can see the market engine indicator is down here at the bottom orange line. Price pushes up, right? And so the market engine is pushing price up. It comes up, but it never really gets past that until you draw this break here, right, of this trend line on the indicator itself. And then as it drops back off here on halfback number 4 here, as soon as it drops back over there, then there's the trade opportunity. All right. So what's happening again is you got multiple pushes in a specific direction. In this case, it's to the downside. So to the downside is halfback number 4, halfback number 6, same kind of trade. Halfback number 8, halfback number 9. Once again, halfback 11 and 12. This is a particularly bearish day, but it'll do it on two-sided days as well. Okay, so that's a halfback pattern. I want to talk about the two-step. And in the two-step pattern here, got a few of these. One was early, about an hour after the open of the market. And the way this works is when the market engine indicator comes up and is touching this orange line, and it does it in, you know, succession, right? It does it really close to each other, meaning within like 3 to 5 candles from each other, touched again. Turns out this one's also just a bit of a divergence, although I didn't call that one out. The way you trade it is, again, you draw the trend line across the market engine indicator, and then as the indicator drops back below that, there's your trade opportunity. If you follow up here and see what's going on price, sure enough, that turns out to be a bearish opportunity. And so you can see that on two-step 2. Down here is two-step 3. Kind of harder to see, but you can see it right there. Two-step 3 is also another trade that's two-step. Here's a two-step 5. So 1, 2, the two-step 5 to the upside. And yeah, I think that was it on this particular day. Oh, just so you know, I'm looking at, what is it, June 21st, 2017. All right, so the third pattern that I'm going to point out here is called the divergence pattern. I've talked about this one before. Fairly obvious. So this pattern occurs when price continues further in a direction, but the market engine indicator is moving in the opposite direction, hence the divergence. So similarly, you're going to draw the trend line and watch for the break to come across it. So I've got one right here where, let's see, we've got the two-step occurred there. Let me find another one here. Excuse me, not two-step, but rather the divergence. Here we go. Here's one on number 7. Okay, so here's an example. So we've got the indicator pushes really far down past the orange line, and then along it comes again. It touches the orange line, but in this case, price goes much further. So there's the divergence. So, you know, you draw the trend line here across here. When the indicator comes back across that, you know, you take the trade up. This would have been for not a whole lot, but for a little bit in that particular case. Here's a more lucrative divergence. It's number 10 here on the chart. So the way this works is really high up here on the market engine indicator, hits the orange, and then drops a lot. Meanwhile, price is going up. That's a pretty obvious one. So again, draw the trend line across here. As soon as it breaks and comes back across that, then there's your trade, which happens to be this red line. So that's a great place to go bearish, to go short on the market at that spot. All right, so those are the 3 patterns that I wanted to point out here at this time. So take a look at those, evaluate those. There's multiple ways to trade with this, but those 3 patterns I find to be extremely helpful in terms of building probabilities. As you know, I'm going to also point out the market effectiveness chart, which I'm not showing here in this particular case. In other words, you can come up with a lot of these patterns without even looking at that. Now, it turns out that the market effectiveness chart for this particular day was incredibly bearish. So I took very few bullish opportunities throughout the day, was mostly taking the halfbacks throughout the day as it continued to break down to the downside. And the market effectiveness chart gave me more confidence to take those halfback trades coming back. Okay, that's it for now. Thanks for joining, and I will talk with you again soon. Bye.